Welcome to the February 13th, 2023 Advanced Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman with your weekly fast-paced tour of the global financial markets. I'm also president, McGowanGroup Asset Management, a team of 10 serving affluent families right here from the Crescent. You can go to networthradio.com, set your time for a brainstorming session with the team that cares. We've got a planning process that we have refined over the last 35 years, and thanks to Harrison Smith, we've advanced that to multi-decade planning. So set your brainstorming time and we'll test the math of the forward financial plan. This is a 5-year Dow chart. I did 5 years because of something that happened back here. This was the Fed tightening cycle of 2018. If you hearken back, the financial media was saying the trade wars caused by tariffs, by Orange Man Bad, would cause a huge recession. Well, it didn't. And what happened right here? Well, actually, the Fed came out and said, we're just about done tightening. That sounds familiar because this was the Fed tightening cycle of 2022. I'm going to show you how aggressive that tightening cycle was, and then we'll put it in context with T-bills, which follow the overnight bank lending rate pretty closely. Anyway, this is the tightening cycle. That was a tough year for equity, a great year for energy, by the way. And energy this week, just a quick update, oil spiked to $80 a barrel on news that Russia is going to cut their production by 500,000 barrels a day in March. And that set a rally off. ExxonMobil hit an all-time new high. BP actually up 17% for the year so far, amidst $219 billion for the 5 major oil companies in 2022 profit. So they've become 10% of the S&P profit, and they're still only 5% of the valuation of the S&P. That would underscore what we think is a bargain status there. Not a recommendation for your portfolio until you come down, get a plan, and a written plan from McGowanGroup Asset Management. This is the pandemic. The Dow low was 18,200. So I had Stephen Norris, Super Chuck Norris, go back and say, well, how is the Dow over 5 years? It's a plus 45%. That would annualize at 7.75%. That's actually not too bad, even after this meltdown. Here's something curious, and then we'll move to what's happening with interest rates. So back over here, that's the first time the Dow hit 34,000, about where it is right now. That was April of 2021. So the return has just been the 2% Dow dividend for that time period, right, which is now coming up on 2 years of essentially the same price it was back there. So is that enough? Well, earnings back here were 20% lower for the S&P 500 and the Dow equivalent. And then you had kind of an earnings recession, then you had the pandemic. Well, earnings are up about 20%, but the value's up about 45%. Some sectors have further to go, and we cover that at networthradio.com in the long play program, or just go to Apple Podcast and download it. While we're on the subject of subscribing, be sure to click subscribe, and if I've earned it, put a like on there. That'll help us out. Okay. This is the T-bill rate. 90-day treasuries closely follow the Fed funds lending rate. And you could see a low below zero. Everybody was so scared in the pandemic. What's this level? Well, that's about 2%. Currently, we're at 4.6. This is the most aggressive tightening cycle since 1981. And did they go too far? Well, we're starting to see signs that they may have done enough already, even though the bad news for January was more than 500,000 net new people got jobs. That's great news, actually. But in the market perspective, when it's that strong, they say, oh, Chairman Powell's going to go to 5 or even more. Well, that happens in the March meeting. But that is the highest T-bill rate since 2007 when they were over 5%. The money supply back then, or the balance sheet of the Fed, was $1 trillion, which I would argue was too tight in 2007, and it exacerbated the crisis, especially residential housing. Right now, the banks are in great shape, and I'm going to cover a stellar bank story here as we go through the charts. Now, these are commodities. This surprised me. So, if I look at the commodities, here's the pandemic. On this chart is about 350. Equilibrium was about 425 back here. Went all the way to 644. This is when inflation disappeared, okay? In July, when the commodities started to implode, we said it looks like that's going to bring down inflation. Lumber per 1,000 board feet was up at 1,700, and it's returned to a more normal level. But commodities are still elevated compared to their 5-year average. Goldman Sachs came out this week and made the case for commodity shortages going into 2024. All right, this is a shout out to Frost Bank. We actually use Frost Bank for our corporate stuff, but this is an unsolicited shout out because I was going back, looked at Credit Suisse. Credit Suisse has gone from $70 down to $3. That's not a good record from their peak price. And so Credit Suisse, in the process of imploding due to a series of mistakes, investment banking completely dried up. But who's doing well? Look at this. If I go to Frost Bank chart, back in 1991, they were just over $1, the equivalent. They've split since then, but the exact equivalent, now they're $132. That's over 100 times where they were back in 91. So congratulations to Frost Bank. And we love the customer service, but that is a stellar blue chip record. I'm Spencer McGowan, President, McGowanGroup Asset Management. Thanks for tuning in. We'll be back next week with the best in financial news. Thank you for tuning in to Net Worth Media today. And our efforts over the past 2 decades to educate clients and help clients make great decisions, that's the reason that we're here at YouTube McGowanGroup, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowanGroup Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowanGroup Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.